Trading isn't supposed to be hard. It only feels that way because you've been playing their game instead of the real one. And the truth is, when you play by their rules, it's nearly impossible to stay funded or make money consistently. You're basically sentenced to break-even jail forever. And here's the worst part. It gives you just enough hope to keep going. Just enough to make you think you're on the edge of a breakthrough. But in reality, you're trapped in the same cycle. Making some profit, slipping up one way or another, then giving it all back and starting from zero. And all you get from that is baggy eyes, lost time, and mental trauma. But trading isn't supposed to be like this, at all. When you play the real game of trading, you actually get consistent profit that grows exponentially, without all the negatives. And the thing is, it doesn't take some sort of superhuman skill or extreme discipline. It's just about being in the right lane. It's about picking the real game. So in this video, I'm going to show you the exact steps you need to take to get out of break-even jail permanently and finally watch your account take off. Here's what most traders don't realize. Making 10K or even 100K is not actually harder than making $1,000. That sounds crazy at first because most people think bigger profits mean harder work, more skill, or some secret setup. But it's not true. Trading doesn't work that way. There are really just two lanes in trading. You're either profitable or you're not. That's it. If you're in the profitable lane, meaning you can make 1,000 out of the market consistently, then scaling that to 10,000 is just a matter of increasing size and stacking accounts. The process itself doesn't change. The setup doesn't change. The rules don't change. You're clicking the same buttons. But if you're in the unprofitable lane, it doesn't matter if you hit a big win one time or made $10,000 on a lucky trade. If you can't do it again and again, then you're not actually profitable. You're still in the lane that eventually gives it all back. And that's why so many traders feel stuck. They confuse making money once with being profitable long term. And most trading strategies don't help much with this if they do at all. That's because almost every strategy out there is built backwards. They're focused on the output instead of the input. And that means patterns, cherry-picked setups, and indicators that all look great in hindsight but don't actually move you into the profitable lane. They fall apart the second you actually try to trade them. You've probably seen this play out. Maybe you back-tested a setup and thought, wow, this thing prints money. But the moment you try it, it's a completely different story. The signals don't line up, you second-guess yourself, you get chopped up, and before you know it, you're either back at break-even or down again. And that's because they're output-focused. You're basically trying to force the market to move exactly like your specific pattern or setup to get a specific result. And you're trying to do this consistently over and over. Well, it's not surprising when this doesn't exactly pan out. The market is an entirely different beast. Price action is almost entirely random and unpredictable, so trying to predict the right setups consistently is incredibly difficult. Actually, I made a video going into detail on exactly why this happens and what I do now instead, which I'll link up here for you to watch later. But trying to trade like this keeps you in the unprofitable lane. Even if you manage to become very skilled at this and stay positive consistently, the market will eventually catch you in a mistake. It's just a very difficult grind overall. Now instead, what you can do is focus on inputs. We start from the ground up and build from there, not the other way around. And this is where you actually start operating like a professional trader. Inputs are the parts of trading you actually have control over. Things like how much you risk on each trade, where you place your stop, how you size your position, your actual system, and how you manage the trade once it moves in your favor. That's all you can truly control. The output, whether those trades win or stop you out, is something you don't have any control over. The market decides that. But here's where most traders go wrong. They obsess over the output. They're constantly thinking, how much can I make on this trade? Can I hit my daily goal? Can I pass this eval? And when they chase the outputs, they neglect the inputs. They oversize, move stops, revenge trade, or hold losers too long. And that's exactly why they stay in the unprofitable lane. Real traders flip it around. They focus entirely on the input. They risk a fixed amount every time. They place the stop logically, not emotionally. And they size the position according to the stop. That's it. When you do this consistently, the outputs take care of themselves. And I'm going to show you exactly how to do this in the real market in a minute. But that's how you should approach trading. So let's say you have a funded account with $2,000 of drawdown. The first thing you should be doing as soon as you get funded is calculating your risk per trade and your max drawdown. Don't even think about your strategy or setups yet. If you risk $200 per trade, that means you can eat 10 losses in a row before blowing up. And if you take a maximum of 2 trades a day, that means you can lose every trade for an entire week straight. This is very safe. It means our drawdown is now protected and we have a very low risk of blowing up. That's our first step. The second step is to know your expected monthly gain. How much can you expect to make for the month while risking $200 per trade? Well, it varies, but you should generally expect to make 10 to 20 times your risk every month. That means you could expect to make $2,000 to $4,000 with this risk per trade. If you're following a profitable strategy with an edge, this is generally what the market will offer you on average. You shouldn't expect to make $300 profit for the month, and you also shouldn't expect to make $20,000 profit. Keep in mind, our risk management strategy means you can lose 10 times your risk in a single week before blowing up. Now, if you can lose 10R in a week but can't make 10R in an entire month, there's a very high chance you're unprofitable, and you need to fix that as soon as possible. So based on this account size, with this level of risk per trade, you should expect to make 10 to 20 times your risk. For reference, this is what a 10 risk gain for the month looks like. Assuming we're trading with a standard 2-to-1 risk reward and following our risk management plan. Now, this isn't perfect. It includes many losses and mistakes. This is a pretty average trading performance, maybe even below average, and yet we're still up 10R for the month. That's what happens when you focus on inputs first. When your risk is the same for every trade, and you focus on only taking quality trades within your system, then it becomes very difficult to blow an account. That only comes from overtrading, oversizing, revenge trading, and other things that happen when you only focus on outputs while completely ignoring the inputs. So now you have a frame of reference. You know roughly how much you can expect to gain in a month, and you know exactly how much you're risking and willing to lose. You don't even need to be that skilled or have that good of a strategy to pull this off. As long as you're consistent and don't do anything extra or emotional, you're already in the top 5% of traders. Even if you're just break even, think about that. So we're already off to a great start by focusing on risk management and consistency before even considering any specific setups or strategy. But once we have our risk structure nailed down, here comes the second part of our input, which is a simple mechanical strategy. You want a strategy that has an edge and is simple and repeatable. This makes results even more reliable and predictable, which is the most important thing you should be looking for. And I'll explain why in a second. But here's what I use, a strategy called the LCE model, where LCE stands for level, confirmation, and execution. And this is pretty much all I talk about on my channel, so I won't go into detail on it here. But I'll link some videos about the strategy right now, so you can watch it later. But in a nutshell, the way it works is that we mark our supply and demand levels, and then take trades from one level to the other. It's basically a pre-built trading system, which makes it almost entirely mechanical. And even if you took 1-to-1 trades and got half of them wrong at random, you're at break even. As you get more familiar with it, you become more selective and take better trades, which increases both your win rate and risk reward and gives you an edge. And remember, your baseline is break even. As long as you follow the strategy correctly and respect risk, you'll grow consistently. That's why I said that the most important thing you should be looking for is a simple and repeatable edge. Trading the unprofitable way is unsustainable, mostly because it doesn't have a reliable way to generate 10 to 20 R per month. Even if it did, it's so time-intensive and exhausting that you eventually burn out and can't execute it right. With LCE, you simply set an alert, wait until it hits, then enter a trade with a stop and target set, and wait until one of those hits as well. Your screen time is literally just a few minutes. Your edge needs to be as reliable as possible, above all else. This is even more important than overall profitability. Because think about it, if your edge is reliable and you can execute it with very little stress and barely lift a finger, then you have a repeatable way of generating profit, and it doesn't really depend on your mood or performance. If you can generate 10 to 20 R per month, then all you need to do to grow is change the R. Keep executing the same trades and following the exact same strategy while increasing your risk per trade. You'll eventually scale it to a number so large that it'll scare you. And then you'll look back and realize how simple it was to get here. You didn't even notice because of how seamless it all was. No more baggy eyes, no more hours in front of the screen, and no more trauma. That's the power of having a consistent and repeatable strategy with the right risk management in place. That's how trading is supposed to be. You're no longer playing the grinding game that everyone else is playing. You're playing the real one. And once you start playing the real game, everything changes. You're following a process that actually compounds, where every trade you take adds to the bigger picture. That's the difference between the 95% who grind themselves into the ground and the 5% who build something sustainable. Now, if this video clicked it for you and you want to go deeper into how the LCE model actually works step by step, check out the videos I've linked here. I break down the whole process in detail with live chart examples so you can see it for yourself. And if you're serious about mastering this and want me to work with you directly, I also have a mentorship where I teach the full system and help you apply it to your own trading. The link for that is down below. Either way, subscribe, drop a like, and stick around because I upload videos like this every week. I'll see you in the next one.